Good morning. As we start the month of November, we have good news to report in the grains. Corn December up 8 cents this week. Soybeans up a whopping 55 cents after uh, Sunday. Treasury Secretary Bessent talked about a potential Chinese settlement that they'd worked out most of the details. Trump and Xi meet Thursday. Kind of anticlimactic because they conclude that they're going to do trade, no big tariffs. Or in fact, many of the tariffs threatened were coming off. And actually, the soybean market dropped 20 cents that morning because they didn't have any details. But quickly, the Treasury Secretary talked about 450 million bushels of soybeans would be bought by January by China, and 925 million for the next 3 years. So soybeans had the greatest strength here. Chicago wheat, though, actually performed well, and no mention of wheat or corn in that Chinese deal, but ag products and mostly sorghum and soybeans specifically mentioned. But Chicago Board of Trade kicks up 22 cents, but ironically, Minneapolis down 4. That might be the best buy right now on the market. Seems like that market is just ignored lately. The opposite side of this, these markets have actually gone the other way. The cattle, live cattle, December down 4 1/4, feeder cattle down 16.27 this week. Gold down 141, silver down 0.426. These markets, all four, look like they have topped. And why would that be? There isn't any relationship really of cattle to gold and silver, other than you could say these are rare earth metals, and these have been involved in trade disputes as well. But maybe those markets are running lower. Maybe the funds are tired of trading them and they ran them up high enough. Maybe they're turning their attention to things like the grains. The dollar was up 1.117, showing that the markets approved also of the China US trade deal, if you want to call it that, or maybe it was an agreement just not to have a trade war, basically. So, interestingly enough, I think I want to look mostly exclusively at charts today because I think there's a lot of information here that we should glean from them. So, first of all, the corn, this week we gained, what was it, 8 cents? But actually, corn does not look at all like the bull market of beans, although it is a trend turning higher. You've got higher lows, you've got higher highs, so definitely the trend is up. But look at these soybeans. Soybeans have run to new all-time yearly highs. So you might say, wow, why doesn't we did make a sale here at $11, a little above $11, a new yearly high. But remember, a month ago, we recommended buying back all of your 25 soybean sales and 100% of your 24 soybean sales. So we own 2 crop years of soybeans. We made a 25% sale of 1 crop year, or 12% of whatever you've got in hand in soybeans if you didn't buy any 24 back. But why would Progressive Ag not sell all of their soybeans when you're at the early high? Well, here's the answer to that question. This is a weekly chart of soybeans showing the last 5 years of soybean trade. And you can see this past year, we have gone to a new high for the year. But in the past 13 months, we have not traded this high in the past 13 months. And certainly I agree, we needed to reward that sale. But quite honestly, this whole past year has been a bottom in the soybean market, trading in about a $1 range between 9.80 and 10.80 most of the time. But this is a bottom. And quite honestly, if you look at this weekly chart, there are all kinds of upside objectives. I would not be surprised if in the next 3 years we're trading at this $15, $16 area. So what's your objective over the coming year? Well, these are going to be resistance here at about 11.36, and then around the $12 area, and then again probably at 13. I think realistically we can get to $12 to $13 in the next year. These are futures markets, but your basis especially in the Northern Plains, has been terrible through harvest. But because China is going to be buying 450 million bushels by January, and that grain will need to be shipped before the South American crop is harvested in March, they're going to be buying 5 million bushels a day, 7 days a week. So it's going to probably be 6 or 7 during the 5 trading days. My point is, your basis is going to improve a lot from the crappy basis you've had at harvest. Most of our beans ship right out to the West Coast for shipment to China. So I think that you've got to have a lot higher price objectives. In fact, when we sold the futures here, we did not sell cash. We recommend it because the basis is so bad, and that's likely to improve a lot, especially up here in these areas that ship to the Pacific Northwest. So look at this weekly chart. You can see we've bottomed the market, and now maybe we broke out of this weekly downtrend. That's all we've accomplished on the weekly chart, and there's a lot of upside potential in soybeans. Not only in soybeans, but also in these other grains. Corn, wheat. Look at the wheat market in Chicago. You're actually still in a downtrend, but you bounced up against this downtrend line, and you could argue that you've broken out of at least this recent downtrend line. So if soybeans have broke out, you cannot run soybeans higher, because soybeans, if you take 20 million acres of land and plant it to soybeans to sell to China, you're going to help the corn and the wheat market as well. And besides, these markets, wheat and corn, have also bottomed basically in the past year. So they've got a lot of upside potential here from a 3 or 4 or 5. Basically, it's a multi-year low right now in the grains. But the soybeans are the first one to break out. I do expect the other grains to break out as well. Minneapolis is probably the most disappointing, actually down 4 cents for the week. We write a deal with China. They're going to buy 20 million acres of soybeans in the next 3 years. And Minneapolis wheat prices are down. People have forgotten about this Minneapolis wheat market. In fact, I think the Chicago Board of Trade would like to kill it. But it's still a market that our spring wheat is priced off. I think that's the best buy right now. But I think soybeans will lead the way and the other grains will follow. Now we turn our attention to two completely different crops. These are the crops trending down. These are the crops that are at all-time highs. Actually, commodities, I should say, gold, silver, and cattle. And they look like they're headed a different direction. So here's our potential top in the cattle market. We've dropped more than 7%. We dropped 10% in the live cattle, and we've recovered about 3% of that. Now, specs can start selling here. Actually, if we recover 50% of this loss, or right about in this area, 238 or so, that's the best spec short side trade. In cattle, though, we recommended pricing cattle, because if you are unpriced in cattle and you experience this kind of price decline, from 240 down to 210, that's a big loss that most people cannot afford to bear. So I would recommend being fully priced in your fat and feeder cattle. So this is a feeder cattle market. Of course, a much bigger drop. I think we dropped like 16% from high to low. We've gained about, if you look at these bars, you went from 320 to, 380. So you've gotten a pretty good recovery here, or a break, $60. We've recovered maybe to 340 or so, barely recovering very much at all in this January contract. But at least you can make some sales here. But actually, if you can recover to closer to the 350 area, I think it's like 349 or so, that would be a better spec trade short. Specs don't have to enter the market. If you miss a market move, you haven't lost any money, but you haven't made any money either. But it's different when you own cattle in a feedlot. You need that price protection. And when you get a recovery, we get a market top, you could get a 50% recovery. You could get a 30% recovery. And maybe sometimes you don't. So we have 4 markets that are topping. So far, all 4 of them have had a 30% recovery, but none of them have had a 50% recovery yet. That doesn't mean it won't come. But the more time you spend here after a market tops, the less likely you are to get that recovery. So if we don't get it next week, we probably aren't going to get it. So I've spent a lot of time talking about these tops in the past week, but potential tops. But here's the gold, 4,400. Remember when we broke above 2,100, I said, hey, gold has the possibility of doubling its previous all-time high. Close your eyes and buy new highs at 2150 gold because it might run to 4200. Bam, we run to 4200 and we actually go $200 higher than that in about another day or two, and then break that 11%. We've recovered 30% of that in gold from the high to the low, gain back about 30%. Will we get a 50% recovery or hit this resistance mark just under that 42, maybe 41.50? That's a great spec short, I think, because at least now when you're top picking, you have a potential stop. If you sell it at 41.50, you've got about a $250 stop above the 4,400. And you hope it never gets there, but that's $20,000 or $25,000 stop. So you got to remember how big these markets are and trade your number of contracts accordingly. Silver popped up here to 53 plus, and we broke down to about 46. We had about a 14-15% drop. Silver dropped almost the same percentage as feeder cattle, and gold dropped a similar percentage to fat cattle, all four of them more than 7%. So at least you have a potential top in this thing. Look at this market, how it got more intense at the top. And here we have, in gold and silver anyway, a beautiful right head and shoulders top. There's your head or top. Here's the left shoulder. Here's the right shoulder. And here's what I worry about. As the further you take this out, now you're looking at this kind of territory on this side of the market. And the longer we wait here, I would not want to be long silver right now. And quite honestly, maybe we need to get short right here at where it traded on Friday, actually. That's that 30% recovery mark. So a lot happening in these markets. The funds seem to be shifting their money away from gold, silver, fat cattle, and feeder cattle, and into soybeans and maybe the grains which are sitting at historic lows, at bottoms of the last 5 years. And these, of course, are at their all-time historic highs. Never have these markets been higher. I think the funds have maybe played that game out. So here's our topic, and there's our high and low in each of these markets. And the difference, the percentage drops we've had. This is a 50% recovery. This is my best spec short position. This is a 30% recovery. If I were a spec trader trading multiple contracts, I'd put a third of them on short here and the other 2/3 short here. We've only got this first third hedged. I think for a hedger, you have to start hedging at the 30% recovery and maybe be 100% here, because as time goes on, next week, if you don't have this 50% recovery, we probably aren't going to get it. So a lot happening here in the commodity markets. Certainly an exciting time for grain producers as they finish off the bottom for multi-year, 5-6 year bottom, and the markets have the potential to go much higher. Take a look at the soybean daily chart, which shows it's at the yearly high, for a 1 year chart, and then look at the 5 year or the 30-year chart on those soybeans. Obviously, there's a huge amount of upside potential from here, and I'm sure the speculators are going to start plowing money into the soybean market. And if they do that, they're going to start plowing money into corn and wheat. I think the fundamentals of soybeans have improved significantly. I don't think our yield is 53.5 bushel. I think it's more like 51.5. Part of that is because we harvested the crop so dry, under 10% moisture in most cases. So corn, of course, maybe not a 190 bushel crop, maybe not even 186 bushel like USDA's last report. But I think corn is still a record yield here, probably somewhere between 182 and 186. My best guess is probably 185. But obviously the yields this fall have been a bit disappointing. Harvest is going great. Weather is a perfect forecast. Warm and dry for the next 2 weeks. I would venture to guess most of the corn will be harvested by mid-November. You have a great weekend and good marketing.